Hey, what's going on, traders? So we got a question about how do you identify impulsive and corrective price action? Okay, so since you guys asked, right, in today's video, I want to show you how do you identify them. Okay, so it's actually a very simple process, but nonetheless, it's very important when it comes to trading, right? Because if you can identify your impulsive and corrective price action, then you'll be able to be on the right side of the market majority of the time. Okay, so what am I going to cover in today's video? Okay, the first thing that I'm going to cover is why you need to understand this, right? Why even bother with identifying impulsive and corrective price action? Okay, why do you need to know this? Okay, because perhaps you didn't ask this question and you don't know anything about impulsive corrective price action. You are just wondering why do we need to know this, right? So I just want to start off this video by explaining to you why you need to know this. Okay, then we'll get into the meat and potatoes of today's video, which is how do you identify it, right? I'll give you certain characteristics of the impulsive price action, right? Give you the examples, then I follow up with the characteristics of the corrective price action, then I'll end off with some examples. Okay, I'll go into the live charts to show you how to do it. Okay, so let's get into the first part, right? So how do you identify impulsive and corrective price action? Okay, why? Why do you do it? Okay, now if you are able to identify impulsive and corrective price action, then you can be on the right side of the market, okay? Because it allows you to predict the general direction of the market. Okay, so if you know the general direction of the market, then you are going to trade in the right direction most of the time. Okay, here's the thing about trading, okay? Majority of the time, an impulsive corrective wave is followed by another impulsive corrective wave in the direction of the first impulsive wave. Okay, that's a bit mouthful. You may not understand that, but rest assured, I'm going to clarify it. Okay, so what do I mean by that? I'm going to repeat one more time. Okay, majority of the time, an impulsive corrective wave is followed by another impulsive wave in the direction of the first impulsive wave. Okay, so let's just consider the first scenario, which is a bullish impulsive wave. Okay, so I actually wrote it over here. So let's say you see a bullish impulsive wave followed by a corrective wave. Okay, what is the next movement? Okay, if you see this kind of patterns in the market, then there's a very high probability that the next move is going to be the bullish impulsive wave. Okay, so this is your most likely outcome. Okay, so if you can identify these two waves, you can identify the bullish impulsive wave and the corrective wave, then you will know that, okay, the next movement is likely to be bullish. I want to be looking for longs. Okay, so that's the power of using impulsive and corrective price action. Okay, so hopefully you're convinced that this will help improve your trading. Hopefully you will listen, you will stick around this video and learn how to identify each of these waves. Okay, now the opposite is also true. Let's say you see a bearish impulsive wave. Okay, you see a bearish impulsive wave, and then after that you see a corrective wave. Okay, so the question is, what's the next direction of the market? Okay, according to this theory, which is actually the Elliott wave theory, okay, I actually created another video about Elliott wave, which I think I'll link to at the top of this video, okay, maybe top right, so that you can check that video out after this video. Okay, I talk about Elliott wave, but I didn't specifically teach you how to identify this impulsive and corrective price action. Okay, so in today's video, I will show you how to do that. Okay, anyway, that's me digressing, sorry about that. But what I meant to say was that if you have a bearish impulsive wave followed by a corrective wave, then your next likely outcome is really a bearish impulsive waves. Okay, so that means that you should be looking to sell whenever you see this pattern. Okay, so by the way, right, if you are new to this channel, right, please give us a thumbs up, right? Please smash the like button, help us to grow. We are trying to impact 100,000 traders just like yourself, right? Help us to grow by hitting the subscribe button as well, right? We've created a lot of videos like this to help you become a better trader. Okay, we also have a 3-day trading guide. The link's in the description, right? Just make sure you get that also, because this impulsive and corrective price action is not a full-blown strategy. Okay, it doesn't tell you precisely how do you enter the market and how do you exit the market, right? What are the specific setups that you're looking for? Okay, but our 3-day trading guide gives you a step-by-step strategy, right? We teach you the MPE strategy. So it's totally free. There's no catch, right? We're not asking for a credit card, nothing like that. It's free. So make sure you grab that, right? The link is in the description. Okay, so let's talk about the characteristics of an impulsive price action. Okay, the first thing that you must understand is that in an impulsive price action, what you see is that you normally see one color. Okay, predominantly one color. What do I mean by one color? Okay, that depends on your chart. Okay, if your chart is white is bullish, which most people are. Okay, let me just white is bullish and black is white is bullish. Let me just write that out. Okay, and let's say black is bearish, and you do see a kind of like a bullish impulsive bar, uh, bullish impulsive movement, then you should see most of the candles being white. Okay, that's what I mean by predominantly one color. Okay, of course it depends on what's the color of your charts. Is it white and is it black, or is it white and green? Okay, doesn't matter. But the point is this: you want to see one color, mainly one color. Okay, there's no hard and fast rule. I'm not going to give it like calculate there's 80%, 60%. It doesn't matter. Just eyeball it. Okay, as long as the movement is predominantly one color, right? It can be white, it can or be black, depending on your chart color. Then that's the impulsive price action. This is the first characteristic. Okay, but that's not all. Okay, you need to have these other characteristics as well. Okay, what you want to see is you also want to see a large body candle in one direction. Okay, what do I mean by large body candle? Meaning that you have this kind of candles. Okay, this kind of candles. Okay, these are the kind of candles that you want to see. You do not want to see this kind of candles like doji candles, or like this kind. Okay, you want to see big body candles. Okay, don't worry, I'll show you in the charts later, or I'll show you in the live charts to help solidify your understanding. Okay, but you want to see large body candles in one direction with price moving fast. Okay. Now, you also want to see the candles tend to close towards the upper or lower end of the candles range, okay? So, of course, if it's a bullish impulsive wave, then if this is your candle, if this is entire range of the candle, then you want to see, the candle close something like this, okay? Okay, if it's bullish, of course, you want to close towards the higher end of the candles range. If it's bearish, then you want to close towards the lower range of the candle, okay? Means somewhere here. Okay, pardon my drawing. Okay, so let's go into the charts. I want to show you some examples so that you can really see how this works. Okay, so what we have over here is we have the Dow Jones. Okay, we're on the daily chart. Okay, just to just to clarify, this works on any time frame. Okay, price is fractal, meaning that the concept's always the same, regardless of whether you're looking at the H4 or you're looking at the day one. Is the same. Okay, so over here we have a very nice impulsive series of movement. Okay, so just take a pause, right? Try to understand why is this impulsive movement. Why did I identify this as a impulsive movement? Okay, maybe you want to pause this video, okay? But let me explain to you, okay? So you can see that this impulsive movement is all white candles, okay? In my case, my charts, it's white, okay? A bullish candle is white and a bearish candle is black. So you can see that this entire movement here, 1, 2, 3, 4, 5, 6, okay? You have 6 white candles, so it's predominantly one color. That's the first pointer. Okay, the second pointer is that it must be big candles. So you can see that this is a very big candle, this is a big candle. All these are all big candles. This is big candle as well. Okay, so the second criteria is also checked. Okay, and the last criteria is the close. The close must be near the top. So you can see that a lot of the candles are near the top. In fact, this candle here is what is known as a marubozu, meaning that it closed right at the top over here. Okay, this is a marubozu. This candle over here also almost closed at the top with very low, small upper wick. This one not so, okay, but this one definitely yes. Okay, so just size it up generally. Do not need to, ask yourself like, oh, how many percent, right? Do not need to overcomplicate things, right? Just eyeball it, okay? As long as it looks like impulsive move and it fits these 3 criteria that I say, then it is a impulsive move. Okay, in fact, in this example, you can see that impulsive move followed by this corrective move over here. Okay, later on, I'll explain to you what corrective move is. Okay, you have this corrective move, and what happens after that? It resumes in a impulsive move again. Okay, so this is why you need to understand this impulsive and corrective move, because it shows you the direction. Okay, that brings me to point number 1, right? The thing that I started this video with why you need to understand impulsive buying corrective move, right? Because it tells you the direction. Okay, so if you see this very nice impulsive move followed by this corrective move, then you can reasonably assume that okay, the next direction is probably going to be up, and I want to be buying. Okay, I don't want to be selling against the impulsive move. Okay, so that's how you use it. Okay, let's look through some more examples just to solidify your understanding. Okay, so you have it here also. Okay, let me just clear everything first. Okay, just one more, then we'll move on to the corrective portion. Okay, so this area is as well is an impulsive move. Okay, you can see. Okay, step number one, or rather criteria number one, is that you have predominantly one color. So you can see that this entire move up is one color. It's all bullish candles. It's all white. Okay, step number two is you want to see that there are big body candles, large body candles. You have large body candle, 1, 2, 3. Okay, so it's kind of telling you that this is an impulsive move. Okay, the last characteristic is that it closes near the top. Okay, again, this is a Marubozu candle because it closes near the top or almost at the top. This one has very little upper wick. This one, it's relatively close to the top. This one is also close to the top. This one is close to the top. So if you just look at it at a glance, you know that this is an impulsive price action movement. Okay. And then of course, after that, you have a corrective price action over here. Okay, so let's go back to the lesson, and I want to show you how do you identify the other type of price action, which is the corrective price action. Okay, actually it's very simple. It's just the opposite. Okay, what do I mean by opposite? Meaning that the first thing you want to look out for is you want to look out for mixed colors. Okay, you want to see a good mix of white and black. Okay, just now in the impulsive price action, you are looking for one color. This one is the opposite. You want to see that there is a lot of fighting, right? There is white, there's black, there's white, there's black. Meaning it's bullish, it's bearish, it's bullish, it's bearish, right? There is a good fight going on. Okay, and that's the meaning of a corrective price action where price is struggling, right? It's consolidating. Okay, you also want to look for small body candles with tons of indecision. Okay, it could be dojis. Okay, it could be this kind of patterns with very small body. Basically, the body is very small and it's ranging, right? It's not going, it's not, price is not moving very fast, and price is going now where? Okay, and you also want to see that the candles close towards the middle of the candles range. Okay, again, do not need to be anal about it, do not need to measure, just eyeball it. Okay, as long as it looks something like this, right, it fits this criteria, then just call it corrective price action. Okay, please do not overanalyze. Okay, there's really no need to. Okay, so let's go back into the charts and let me show you okay, so over here you can see that this is a corrective price action. Okay, so let me just clear this and let's go through this. Why is this a corrective price action? Okay, step number one, right, or rather characteristic number one is that you want to see a good mix of color. Okay, so ask yourself this: is there a good mix of color? Okay, the answer is yes, because there is black, there's white, there's black, there's white, there's black, there's white. In fact, over here you see white, black, white, black, white, black, black, white. Okay, so it's a very tough fight. Okay, so that is a corrective price structure, right? It's mixed, right? It's not one color. Okay, then the second one is that you do not see price having very big bodied candles, except probably this one over here. Okay, you do not see much, but generally, if you just eyeball the whole pattern, you think that the bodies are not very large, okay, and a lot of them are forming kind of like doji, meaning that the body candle is very small. Okay, it's not like this. Okay, it's not like this kind of big candles over here. It's just very small. Okay, so this is how you tell that there is a corrective structure. Okay, in fact, in this case, let me just say that this is impulsive. Okay, let me just change the color. Okay, this is impulsive. Then you have corrective, right? So normally you expect it to be impulsive again. But what happens in this case is that it's impulsive towards the downside, okay? Because this too is impulsive candle, okay? So please note that this is not foolproof. It doesn't work 100% of the time, okay? It's just a guideline. That is why you need a full-blown strategy. You cannot just watch this video and just start trading every impulsive corrective move you see. You need to have a trade setup. You need to have a trade plan, okay, and that's what we provide in our 3-day trading guide. So make sure you use that, right? In fact, our YouTube channel has a lot of videos about trading strategies. Okay, we have over 100 videos, and we are creating more each day. Okay, we spend a lot of money in our education, and we are very happy to share it with you, right? We share with everything we know, right? So honestly, there is really no point in you going out there to learn from others. Just learn from us, hit the subscribe button, check out our other videos. Okay, this is the value that we are trying to provide to you. Okay, so this is how you do the corrective wave. Let me just show you one more again. And then I'll just do a summary, and then we can just call this video a day. Okay, so maybe let's look at another currency just to show you that it's consistent. Okay, let's look at euro dollar. Okay, let me just clear the charts. Okay, so this one over here. Okay, trying to make a guess. What is this movement over here? Okay, so this movement, it's actually impulsive move followed by a big corrective move over here. Okay, so let me just change the color, then I'll go walk you through why this is so. Okay, so this is an impulsive move, very clear because it's one direction, it's all white. Okay, the candles are very big and closes near the top. Okay, this area over here, it's a corrective wave because you can see that there's a lot of black and white. So you see black, black, white, black, 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 white, white. So you do see that there's a good mix here, and you can see that a lot of the candles, especially this region here, okay, it's very small. The candle body is very small and it's closing in the center. Okay, so this is a corrective structure, and what happens after a corrective structure is a impulsive structure in the direction of the first movement, which is in this case bullish. Okay, so that's what I explained at the beginning of this video, right? Impulsive corrective wave is followed by another impulsive wave. Okay, so that's how you use this. Okay, so hopefully that is clear. Okay, if something is not clear, just let us know, because we love to help you, right? Just leave a comment down below, tell us the struggles that you are facing. You can't identify it, you need some help, just leave a comment down below. Or if you have any other questions, right, it doesn't have to be related to this topic, just let us know, right? Because we really want to help you, right? We really want to serve you at the highest level possible. Okay, and we don't want to just create videos which we think are useful, but we want to create videos that actually really help you. Okay, so this is how you identify the corrective price action. Okay, so as a summary, right, I started this video off by sharing with you why you need to identify impulsive and corrective price action, right? Because impulsive price action, corrective, is likely to be followed by another impulsive movement. So it helps you predict the direction of the next movement, helps you to be on the right side of the market. Right, I went through the characteristics of impulsive price action, which is basically you have predominantly one color, then you have big candles, right, large candles, and the candles are closing at the high or low of the candles range. Okay, I gave you some examples, and I also talk about the corrective price action, which is just the opposite. You see a mix of colors, right? You see a strong fight between the bulls and bears, so a lot of white and black candles, right? You see that the candles, the body is rather tight, and the price tends to close near the middle of the entire candle range. Okay, then lastly, I gave you some examples of this corrective price action. Okay, so if you have any questions, just leave a comment down below. Right, so what I want you to do right now is I want you to check out the other video. I want you to check out the Elliott wave video, which I'll link at the top right, because that will complete your understanding about this impulsive and corrective wave. Okay, so thanks for watching. I'll see you in the next video.